Think that you work hard day and night and save a lot of money so that you can build a house where you and your family can live in it peacefully. You work hard day and night and finally save so much money that you will be able to buy a house. You give some money, take some loan. The house is about to be yours, but you come to know that the company from which you took the loan not only yours, have scammed 34,000 crore from banks too. Think what will be your situation? DHFL, a company that was started with a vision for semi-urban and rural areas to help the group of people of lower income to buy a house. Today they have scammed banks 340,000 crore rupees, has done the biggest banking fraud of this country. From 2019 to 2020 within this year, Punjab and Maharashtra Cooperative Bank and Yes Bank. In both of these banks, a big situation of cash crunch arises. The account holders of these two banks were not able to withdraw their money from their accounts, due to which they come under the supervision of RBI. An investigation is done, and a very big thing comes to the forward, that there is a strong relation between the top officials of these two banks and Vadvan family. Housing Development and Infrastructure Limited, HDL, and Dewan Housing Finance Company. The promoters of both of these are from Vadvan family, and these two companies together scammed bank for crores of rupees. The matter is now out of hand. RBI's involvement is necessary. And from this, the country's biggest banking fraud starts. The story begins in 2019 when DHFL defaults its 60 crore loans interest. The company said that this is a small situation of cash crunch, but the reality was something else. By the time of July, the company started defaulting all its repayments. Now the depositors had also started filing cases against the company, and from here all the scam comes forward. To understand the 34,000 crore scam of DHFL company, it is very important for you to understand these four things. Number 1. What does the family tree of DHFL look like? Number 2. What was the working model of DHFL after all? Number 3. How does the money laundering process work? And number 4, and most important, how is this scam executed? This story begins in 1947. After the partition of our country, a businessman named Kuldeep Singh Vadvan from Pakistan comes to Mumbai. Now look at this very carefully so that you can connect the dots easily. Kuldeep Singh Vadvan has two sons, Rakesh Vadvan and Rajesh Vadvan. 11. April 1984, Rajesh Vadvan starts DHFL. After which, if you see today, DHFL is run by Rajesh Vadvan's two sons Kapil Vadvan and Dheeraj Vadvan, and along with them his daughter-in-law Aruna Vadvan also runs this company. On the other hand, Mr. Rakesh Vadvan, the second son of Kuldeep Singh Vadvan, starts HDL in 1996, which today his son Sarang Vadvan is running. In this whole scam of DHFL, the main character are Mr. Kapil Vadvan and Dheeraj Bhardwaj. But there is a third character too, who plays a huge role, about whom you will know later. How this scam was executed and who is the third main player inside this whole scam. To understand it, first of all, you have to understand the working model of DHFL. DHFL is an NBFC, i.e., a non-banking finance corporation. Basically, a lot of people need to take a loan. In this case, we are talking about a house loan. Now, these people can either go to the bank to take this house loan, but there are three major problems in taking the bank loan. Number 1 is excessive paperwork. Number 2 is we don't get loan easily from bank and it is lengthy process. And the third and most important, for rural areas and semi-urban areas, there are very few banks that give loans easily to these people. Now in this people go to these NBFCs where people get loan easily and less paperwork, and moreover, NBFC makes loan available for semi-urban and rural areas people, whereas banks don't. Now the question is how all these NBFCs make money. So if we talk about DHFL, then it took big loans from big banks to provide housing loans to the people. NBFCs get loans from banks at very low interest rates. So for suppose, If DHFL took money from SBI or PNB at an interest rate of 5.5% to 7%, then DHFL provides housing loans to people with the same money at an interest rate of 8-12.5%. And the remaining margin of 1 of 4% is the income of DHFL. Moreover, an NBFC like DHFL raise money from public in the form of bond and debentures, the money that is further channelized to give loans to other people. Till the year 2012, everything was going well. People were also getting loans and the bank was also getting their money on time. But suddenly something happens this year from where the story of DHFL gets changed forever. Scam of 34,000 crore rupees is very huge money is not an easy thing, which brings us towards the most important thing, that how this scam have happened. 30 November 2021, Union Bank registers a complaint with CBI that DHFL has given retail loans to under project finance of 14,000 rupees crores, but these loans don't exist in reality. According to an audit report of KPMG, DHFL has transferred money to 66 different companies. But you know what? Out of these, 25 companies neither have address nor revenue. And from here, all secrets of DHFL started to reveal. Now, to understand this, you need to understand this two things. Number one, how money laundering process works, and number two, how this scam was executed. So understand this very carefully. In any money laundering process, these three steps are followed. Step 1. Initial placement. Now see how this works. For example, a businessman or criminal have a lot of money to convert it into white. The first thing is they set up a legitimate business. For suppose, I open a restaurant, then all of this money I will transfer in my restaurant's account, against which I will create fake bills and generate fake invoices, in which I will show that I did some particular sales from which this money came. So for suppose, my restaurants make sales of 20,000 rupees daily. So my actual sales is 20,000 rupees. But by infusing my black money in restaurant, increased my sales figure by 20000.so. Now my adjusted sales figure would be of 40,000 rupees daily. I know what you are thinking after all this. That if that's so, then overall revenue and profit of the company will increase and you have to pay taxes. Well, not really, because this is the place where the second step of money laundering starts, i.e. layering. So all my illegal money I have infused in my restaurant by fake bills, due to which the revenue figures of my restaurant has increased. I will reinvest this money. Either assets will be purchased through my restaurant business or this money will be transferred in shell companies, due to which my overall profit will reduce and I won't have to pay any tax for my business. Now all my money through my restaurant has reached my shell companies. Shell companies are that company which doesn't have revenue nor business. These companies only exist on paper as an entity. In most of the cases, all these companies either in Mauritius, Seychelles, or Cayman Islands are open there, which are tax-free countries known as tax havens 2.so. Basically, the companies of these countries are tax-free, nor their accounts are checked. These money is now in shell companies' account. Now either one of these three things will be done, or all. Point 1. Cash withdrawals. All the money will be withdrawn in cash from that company, or the money will be invested in assets, real estates in different countries, buying stocks and all, or it will be transferred to create a new company, other company. So, in simple words, all the illegal money after all these processes now whiten with you. Now I hope that from money laundering to DHFL's working you would have understood. Now most important, how was scam of 34,000 crore of DHFL executed? 2012. If any NBFC wants a loan from any bank in our country, then they need one of these two: 1 SD debt credibility and second connections. In case of DHFL, on the basis of both of these, they took a huge loan from bank. Particularly, it was taken to provide housing loan to people. But in case of DHFL, this money was not going in people's account. Instead, it went to company's promoter's account. How? Now look at this very carefully. In 2012, Kapil Vadvan and Dheeraj Vadvan together set up a Bandra branch of their company. DHFL takes up a lot of loan from bank to provide housing loan to people. After this, all the money gets transferred in DHFL's Bandra branch, from where this money is transferred in 316 different loan accounts, which were all fake accounts. DHFL has a standard loan process in which people went to DHFL first, then a loan request of theirs was done. That loan request was sent to company's database. Then it went to the underwriting department and then to approval committee, and then finally to chief managing director. He approved and passed that request. But all this 2.60 lakh accounts process was something like this. Loans request was directly sent to chief managing director, and the approval of loan was sent via email on his email only.so. How this scam happened? DHFL's Bandra branch, which only existed on paper, from that branch money was transferred in 316 account in the form of loans. With that, they also transferred this money to 66 different companies in the form of loans. Now, 2.60 lakh accounts and 66 companies, all their money was transferred to shell companies, and then reached to companies' promoters. The promoters then invested in real estate as cash and transferred to their offshore accounts. And this is not the first time when companies' promoter are going jail. In fact, it is something very casual for them. The promoters of DHFL has been to jail many times, and they get bail too every time. But how? Well, if you go back, you remember, in the starting of the video I mentioned 3 main players. And this is where the third player comes in. That third player is no other than politicians. Not against any political party, but just look at the events. 21 January 2020, Kapil Vadvan gets arrested for PMLA, Prevention of Money Laundering Act, but he gets bail on February 22nd. Not only this, that bail is approved by Bombay High Court. And that too when Enforcement Directorate showed all the proof against him in court. This scam was running from 2012, but till 2019 the credit rating of DHFL was superb because all the rating agencies had given good credit ratings to DHFL. How? In 2015, the PM Awas Yojana gets launched, by which government promises to provide affordable homes to people. During this scheme, government pressurized banks, and due to which banks easily gave loan to DHFL. On top of it, all the banks from which DHFL took loan, they got interest subsidy too on that. Why? Because this loan was taken under PM Awas Yojana. But as you know, people never got the money to build their house, and all of it was in promoters' pocket. Finally, the Primal Group bought DHFL in 34,250 crores and has settled most of the money of banks, but those people who invested in DHFL's bond, debentures, and stock, what about them? Due to this scams, government banks' loss increases, and due to which, to support government banks, the government gives more money to them, which comes from increasing tax. What's your opinion on this? Let me know in comment box, and please subscribe and share my channel. Thank you.